Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 freshly IPO'd stocks that Wall Street is rating a strong buy. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that just hit the public markets last month, and now they have a ton of Wall Street analysts rushing in with some fresh buy ratings. We did do a video similar to this a week or two ago, but just in this past week, I saw 3 new stocks with all of these new buy ratings, so I thought it was worth taking another look. Of course, these ratings are all coming in after that customary quiet period following an IPO, and the overwhelming consensus is bullish. So we're going to take a look at these companies, what it is that they do, what numbers we have so far as they haven't made any public earnings reports yet, and of course what those Wall Street analysts are predicting for the stock's future. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's dive right into these 3 strong buy newly IPO'd stocks. We're going to start things off with a company called Netskope. They trade under the ticker NTSK, and they IPO'd on September 18th. The initial price range was set at $15 to $17 per share, but was increased and then priced at the top end at $19. They offered over 47 million shares, initially raising about $908 million. The stock jumped up to $25 shortly after their IPO, and it's settled down since, now trading just shy of $22 per share. Netskope is a cybersecurity company specializing in secure access server edge and security service edge, providing cloud-native solutions to secure enterprise data, applications, and networks. Their core offering is the Netskope One platform, which integrates security services into a unified system powered by AI and machine learning for adaptive threat protection and policy enforcement. They focus on enabling zero-trust security, accelerating access to cloud, web, and AI resources, and modernizing networking for remote users, branches, and multi-cloud environments while reducing infrastructure complexity and costs. As a newly public company, they've not yet shared a public quarterly earnings report, but we can take a look at their SEC filing to get some insight to the numbers. And there we can see they shared $707 million in annual recurring revenue, which had seen a 33% year-over-year growth. Over 85% of that revenue is from $100,000 plus customers, and they boast a 118% net retention rate. In the first half of their fiscal 2026, they had $9 million in operating cash flow and did post a $170 million net loss. Just a few days ago, we had a wave of Wall Street analysts initiating coverage on the stock. That included a 5-star analyst from Wells Fargo. They said that Netskope is one of the few mid-cap companies that can deliver strong annual recurring revenue growth at scale with expanding profitability margins. The market evolution toward zero trust drives the sustainability of Netskope's ARR growth. We also heard from an analyst at JP Morgan, who says that Netskope is a classic high-growth, numbers-getting-better story. Market leadership, secular tailwinds, and legacy displacement support pure high growth for the company. Altogether, we heard from 14 Wall Street analysts, and Netskope comes out with an impressive, unanimous strong buy rating. The average price target works out to $26.92, implying an upside potential of 23.5%. Looking at those price targets down below, a lot of 4- and 5-star analysts weighing in, which is great to see, and price targets ranging from an upside of 14% up to 28%. Second on the list today is Pattern Group. They trade under the ticker PTRN, IPOing on September 21st at $14 per share. They raised about $300 million, valuing the company at approximately $2.5 to $2.6 billion. Pattern Group is a global e-commerce accelerator that partners with brands to optimize and grow their online sales, helping across marketplaces, direct-to-consumer channels, and other digital platforms. The company uses proprietary technology, AI, data science, and a team of experts to drive revenue growth, often by acquiring inventory from brands and reselling it on platforms like Amazon while handling logistics, marketing, and optimization. Founded back in 2013 in Utah, they position themselves as a pioneer in e-commerce acceleration, focusing on technology-driven marketplace strategies to help brands scale globally and maintain control over their digital presence. They have scheduled their first quarterly report as a publicly traded company for November 5th when they'll share their third quarter. For now, we can take a glance at the SEC filing, where they shared that in 2024 they had revenue of $1.8 billion, and 48% of that revenue was related to brands that they've been working with for over 5 years. They have a 116% net revenue retention rate and 29 patents and patents pending. 2024 adjusted EBITDA came in at $101 million. Earlier this week, we saw their own influx of analyst ratings, one of them coming from a 5-star analyst at Evercore. They said the business is already operating at an impressive scale with durable partner and customer relationships and a long runway of growth. Pattern, as the category-leading e-commerce accelerator, is positioned for sustainable high revenue growth with potential for expanding profitability. Also weighing in was a 5-star analyst from Stifel, who said the company is a well-positioned leader in the e-commerce accelerator category with strong brand retention and leading-edge technical capabilities. The firm does not see risk to Pattern's revenue being highly concentrated on Amazon. So far, the Pattern Group has attracted 10 current Wall Street Analyst ratings, and again, we have a unanimous strong buy consensus. The average price target comes in just above $18 per share, implying an upside potential of 35% from current prices. Looking at those ratings down below, once again, a lot of 5-star analysts weighing in on this new stock. Price targets range from an upside of 26% up to 41%. If you've made it to our third stock today, then make sure you've hit that thumbs up button. Third on the list is a company probably better recognized by name. We're looking at StubHub. They trade under the ticker STUB. They completed their IPO on September 16th, pricing shares at $23.50 each, which was in the midpoint of their range. They raised approximately $800 million, valuing the company at $8.6 billion. The company has seen some rises and falls since though, and is down about 13%, trading at above $17 per share. StubHub is a global online ticket marketplace, enabling fans to buy and sell tickets to live events like sports, concerts, festivals, and more. Founded back in 2000, the company operates under the StubHub brand in North America and Viagogo internationally, serving over 90 countries. They facilitate secondary market resale, charging fees to both buyers and sellers, while offering features like interactive venue seat maps, mobile ticket delivery, and pricing intelligence, powered by AI and machine learning. We don't have a date yet for their first public quarterly earnings report, but looking at their SEC filing, in 2024 we can see that they had $8.7 billion in gross merchandise sales, and that represented a 27% year-over-year growth, with over 40 million tickets sold to buyers in more than 200 countries. Recently, initiating coverage on the StubHub stock was a 5-star analyst from Mizuho, who said the firm views the shares as inexpensive with an attractive risk-reward. StubHub should experience multiple expansion as it gains credit for execution not embedded in the shares, as well as a 5-star analyst from Bank of America. They said their firm expects healthy resale market growth and share gains for North America's largest secondary ticket marketplace with close to 50% share. They forecast ad initiatives to drive revenue growth well above other internet marketplaces and identify 3 near-term catalysts: the introduction of ads, team deals, and the US World Cup that could drive optimism on further growth. StubHub has 11 current analyst ratings and almost comes in as a unanimous strong buy with 10 buys and 1 hold rating. The average price target is $27.80, implying an upside potential of about 60%. Looking at those ratings down below, once again guys, a lot of 5-star analysts here. Our price targets range from an upside of 32% all the way up to 164% here at Goldman Sachs. So that is a quick look at 3 newly IPO'd stocks with a lot of recent buy ratings from Wall Street analysts. Let me know your thoughts on these companies, and if any of them are going to make it onto your watch list. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock. Please make sure you stick to your own investment plan and always do your own research and due diligence. Thank you so much for watching. Have a fantastic day, and I'll see you back here next time.